this lesson, the aim is to learn about how income is recorded in a double entry bookkeeping system. You need to be able to identify income, double enter cash and credit sales, process receipts for credit sales, calculate and explain account balances and state where they'll be recorded. In the previous lesson, we learned about double entry when using asset and liability accounts. Asset accounts are debit records and liability accounts are credit records. The opening balance on an asset account shows the value of assets in that account and is on the debit side. Further debits will increase the account balance, the value of the assets. Credit entries have the opposite effect and reduce it. The opening balance on a liability account shows the total amount of debt the business owes and it's on the credit side. Further credit entries increase the account balance, the amount of debt owed. Debit entries will have the opposite effect and decrease it. In the next two lessons, we're going to be learning about how to account for income and expenses, which are recorded in the statement of profit or loss and are used to calculate profit or loss. Income accounts are credit records. The business is providing goods or services to others. And expenses are debit records. The business is receiving goods or services for which something must be due. We have to work with all four account types when accounting for income and expenses, so double entry can start to feel more challenging. So in this lesson, we'll just be focusing on accounting for income. When the business sells a product or service, it's always recorded in the sales account. At the end of an accounting period, the total on this account will be used to calculate profit. Recording the equal and opposite effect depends on the type of sale. For example, a supermarket's customers are all likely to pay for what they buy immediately. We call this type of transaction a cash sale, even though they might pay using debit or credit card. The money that passes through the bank is recorded in the business's bank account. If the business keeps the cash it's received on the premises, it's recorded in a cash account. Here you can see why we need these accounts. Let's say the accounts are balanced at the end of the month. The sales account will tell us how much the business has earned from selling goods and services during the accounting period. The bank account tells us what the bank balance is. And the cash account tells us how much cash is held on the premises. Each account serves a completely different purpose. Get ready to pause the video to give yourself time to read and answer the question. £4,500 is added to the sales account balance, giving a revised balance of £104,500. This is the business's turnover, total sales to date. £4,500 is added to the bank balance, giving a revised balance of £24,500. We'd only use the cash account if the business kept some cash on the premises. You've already learned how to process transactions in debit and credit records. Debit records are used to record assets and expenses, and credit records are used to record liabilities and income. Make a note of this as you'll keep needing to refer to it to answer the questions that follow. Get ready to pause the video to give yourself time to read and answer the question. The sales account is a credit record, so the opening balance is on the credit side. The business has sold £100,000 worth of goods or services to date. We need to increase it by £4,500, so we credit it. The equal and opposite entry is debited to the bank, but let's think about this carefully. When there's money in the bank, it's a debit record, so the balance is on the debit side. The funds are paid into the bank, which increases the bank balance, so that's why it's debited. It's so important to continually check your work because it's so easy to make a mistake in a double entry bookkeeping system, particularly when you're learning. Calculate the account balances to see if what you've done makes sense. The balance on the sales account is £104,500. Do the same for the bank account. The balance is £24,500. Finally, check the entries balance. They do, as £4,500 has been debited and credited in two accounts. Frequently, double entry is reversed. An error like this would reduce sales by £4,500 to £95,500 and reduce the bank balance to £15,500. Again, carrying out simple checks frequently can help you to work more accurately, and double entry will make more sense. Get ready to pause the video to give yourself time to read and answer the question. Sales increase by £25 to £104,525 and the cash account increases to £525. Get ready to pause the video to give yourself time to read and answer the question. The sales account and income account is credited with £25, but this time the cash account is debited rather than the bank account. The income account shows the balance as £104,525 and the asset account balance, the debit record, is £525. Get ready to pause the video to give yourself time to read and answer the question. The sales account is a credit record with an opening balance on the credit side. We need to add the additional sales by crediting the account. The bank account and cash account are debit records, so the balances are on the debit side. We need to add the money received to those balances by debiting the accounts. Did you remember to check the entries you've made balance and check the account balance makes sense? Sometimes in a double entry bookkeeping system, you'll see the total recorded in one account. So £6,000 has been recorded in the sales account. Then how the money has been distributed is recorded in the other accounts. £5,000 was banked and £1,000 cash was retained. There are circumstances where this is all right, providing the entries balance. They do, as the debits total £6,000, which is equal to the credit entry. There's a mnemonic that helps us use double entry accounts correctly. Expense, asset and drawings accounts are debit records. When we debit them, we increase the account balance. Liability, income and capital are credit records. When we credit these accounts, we increase the account balance. Making an opposite entry reduces the account balance. Make a note of dead click, as you'll find it very useful to refer to. Get ready to pause the video to give yourself time to read and answer the question. The sale is recorded in the sales account. It's an income account so a credit entry increases the account balance, adding £10,000 to the amount of sales made to date. £9,500 was banked. Cash is an asset, so debiting the account increases the account balance. That's the amount of money at the bank. The cash account is also debited with £500. The entries balance as the total of the debit entries equal the credit entry of £10,000. Many businesses buy and sell on credit, meaning the supplier has agreed to the goods and services being paid for in the future, often 30 or 60 days later. It's important that the business keeps a record of these debts. All sorts of terminology is used to name the account used to record customers' debts. We'll keep it simple and name the account Customers' Debts. Get ready to pause the video to give yourself time to read and answer the question. We record the sale by adding £300 to the sales already made during the period, so the revised balance is £75,300. Customers owe the business £2,500. That now increases to £2,800. Get ready to pause the video to give yourself time to read and answer the question. Did you remember to question what you've done rather than double enter on autopilot? We need to increase the amount of income the business has earned by crediting the income account, the credit record, and increase the amount customers owe by debiting the customer's debts account, which is the asset account and debit record. The account balances are now £75,300 and £2,800. Get ready to pause the video to give yourself time to read and answer the question. The debt needs to be removed from the customer's debt account. Customers did owe £2,800. They now owe £1,800. £1,000 needs to be added to the bank account, so the revised balance is £14,500. A common error is for the sales account to be adjusted. The invoices were recorded in the sales account when the goods and services were provided around 30 days ago. If we record this transaction again as a sale, we'll duplicate the original transaction. Get ready to pause the video to give yourself time to read and answer the question. We debit asset accounts to increase the account balance, what customer owes us. We need to reduce it, so we credit it. Let's do a check. The balance on the account can be calculated as £2,800 minus £1,000 equals £1,800. The bank balance needs increasing, so we debit it. The balance is now £14,500. Get ready to pause the video to give yourself time to read and answer the question. To increase the amount in the income account, we record the sale as a credit. To increase the amount customers owe us, we debit the customer's debt account as it's an asset account. No entries are made in the bank account as no money has been received yet. Get ready to pause the video to give yourself time to read and answer the question. Debiting the bank account increases the bank balance, the asset of cash, by £425. The customer's debt is on the debit side of the asset account. The balance needs reducing, so we credit it. Let's do two simple checks. The entries balance and the balance on the customer's debt account looks reasonable. It can be calculated as £850 minus £425 equals £425 outstanding. Do ensure you make a note of the mnemonic DEBCLIC, as it will help you use the double entry accounts correctly. In this lesson, the income account we used was a sales account. It's worth noting that other forms of income are recorded in exactly the same way. The asset accounts we used were customers' debts, bank and cash. I hope you've enjoyed learning about how to record sales in the double entry bookkeeping system. In the next lesson, we will be learning about how to record expenses.